Broadcast is now starting. All attendees are in listen-only mode.
Hello, good evening, or good afternoon to everyone, depending on where are you at this moment. Here in Europe, I'm in Amsterdam. At this moment is 4 p.m. So good afternoon for most of the European people, and for those Americans, yeah, good morning. It's finishing the morning. You are, I think, around midday. Please let me know if you can hear my voice okay and you can see the screen. You have a chat button just below where you can just text and send me your comments and okay and confirm this. Tai Tower is saying that everything is okay, that he is good. I'm happy you're good and you can hear okay. Christian, okay, all fine over there. So perfect. And the sound, is the sound okay? Also, all okay. Say James. Okay, perfect. So sound is good. Sorry about my voice. It's not the best at this moment. Okay, everything okay. Thank you to all of you that you are confirming this. James, Christian, Tai, Joy, perfect. And you can see the screen also, right? The financial forecast should be at this moment there. Cool, perfect. Christian saying that is right. Okay, so I will share the camera so you can put the face to the voice on the other side. Nice. Okay, so perfect. You can see also the screen, the video, the voice. All looks to be okay. Okay. Perfect. So with this, we can start with the webinar today. Okay. So as you can see, I'm working from home. Michael, thank you for confirming. Okay, I hope all of you are okay, especially on these difficult times that we are facing. I would like to know, where are you from? Where you sit at this moment? So I can see the different specific aspects that you are facing. We have people from Israel, Etai, Choiti from India, Christian from Stockholm. If I'm okay in Stockholm, you are not anymore in lockdown, no? I think you are quite free at this moment. From USA, Git, she from India. Okay, welcome to all of you. You can see Shane from Nigeria. So we are now in 3 different continents. That's very nice. I really like that. So let's go to start with the webinar. Please feel free to comment, to make questions, to ask for instruments if that's why you have the chat box there. Everything I will try to answer today. If I cannot answer today, I will send you the answer through email during the week, okay? But please try to participate as much as you can, because that is really what make this webinar so rich and so nice, so everybody can learn from everybody. Okay, so let's go to start with the webinar. I will put the the PowerPoint here. I will I will make the PowerPoint bigger. So what is the idea of today? I don't know if you joined before some of the webinars we had. This is the 3rd edition we are doing about the Corona crisis. This is a follow-up of the prior webinar we did regarding this all this subject. We started in March, April, March, April, May. So, or we did April, May. This is the 3rd one, April, May, June. What is happening exactly? So we are doing all the follow-up, especially of these main KPIs, macroeconomic KPIs. So we will see what's happening at this moment. We'll point what is happening regarding, I don't know if you heard about social mood. We will talk about a little of social mood and what is happening now in this uptrend that we are having in the indices now, in the global indices. Then we will just focus in 3 instruments, because when I try to do more, I never have enough time. Massimiliano is saying that he cannot hear. Someone else cannot hear what I'm saying. Can you hear now, Massi? Audio clear, shame. So Massi, maybe is from your end. Try to check the volume audio if you have really this activate. If not, just log off and log in again to see if that can solve the issue with the audio. Okay. So I was talking about we will focus on 3 instruments, but if you want to see another instrument that is not here, so we will focus on euro, the SPX and the gold, so we can cover forex, indices, and commodities. Yeah, but if you have something specific you want to see, just let me know. Eric says that the audio is failing. Okay, so there are 2 persons now with the audio. Computer audio. Okay. Okay, now the audio looks okay. I will. Okay, I switch it off and turn it again. Okay. Eta is asking for the 10 years yields. Yeah, we can have a look to that also. Okay, now you can hear me because I switch off and I switch on the audio. I think it should be okay. My connection is, the speed connection is okay. Okay, perfect. So let's continue then with the webinar. And then at the end, we will finalize on what was the performance of the artificial intelligence we developed. What was the performance in May? What is the performance year to date? And what is new within the tool? Okay, so that's the idea for today. Let's go to start with a brief intro. So the financial forecast has 2 main objectives. The 2 main goals for us are, the first one is education. Yes, we give education to all those that want to learn about financial markets, about how to invest in financial market. And also we develop artificial intelligence tools that helps investors to make the best decisions. Okay, so we are focusing on those 2 subjects, education and tools, to make easier and to give good support to the investors nowadays, and give to them another option, a different kind of product, investment product, so you can make your wealth grow in a different way also. And all the tools and all the education is centered in this idea that we have here on the side, on the right side. So we believe the financial markets are the manifestation of economic activity. I think everybody will agree with that, will share that idea. Yes, we can see when we want to know how the economy of one country is, we directly go and check the indices, the financial market, to see if the financial market is going up, is going down, what is happening there. So we always go to this source to check what is the health of the economy in one country. The economy, this economic activity, yes, arrives from interaction. We need to be humans interacting in order to create this economy. We need to trade, yeah, need to be interaction. And this interaction, of course, between people create emotions. Yeah, and these emotions are what we call the social mood. And these emotions are shared within the group of investors. Yeah, everything that is sharing is involved in this ecosystem. Okay, someone cannot hear. Okay, let me check again. Okay, I will stop sharing the video just in case, and let's see if not sharing the video, the sound improve. Okay, let's go to make that test. Okay, I'm not sharing video, and I hope that the volume, that the audio gets better. Okay. Okay, so, and this social mood that is shared within all these investors, with the group of investors, fluctuates and behave following a fractal pattern. Yeah, and this fractal pattern is the one that we could decode in different kind of instruments, and it's the soul of all our tools and education. Okay, understanding this, so we can move forward. Okay, that's me. I will skip this part so we have more time to focus on what is really important. Okay, so let's go to start briefly with the economic calendar for this month. What are the key KPIs that we need to focus, especially now with everything surrounding? Yeah, what is happening with the corona crisis? We will see that the optimism is growing, so it looks like everything is coming to an end. I hope that, but we will try to get some basement and some foundations to that optimism. Okay, that's really important. Okay, so where to focus this month? We have the Thursday, the ECB interest rate decision. This is quite important to see. Probably we will not have any change. Okay, we are not expecting any change, but what really is important to hear is a press conference and trying to find out what is the idea of monetary policy for the coming months. Okay, what is the strategy that the ECB wants to follow in the coming months? That's really important. Okay, why? Because we will hear if the monetary policy will continue being dovish, if there is some chance to go to negative interest rate, yeah, if we will continue increasing the quantitative easing. All those are really key topics to pay attention in this press conference. Then Friday, and this is the most important event, I think, from all month, that is the NFP and the unemployment rate. That expected is 19.7. Okay, if we remember a couple of months ago, we were in, I think, 3.5, 4.3. We were in that range. And suddenly we jump to 14.7, and now we are expecting a 19.7. Okay, and lose 8,000 job positions. Okay, then we will move to the CPI. Important to see how the inflation is behaving. We will see further why. Interest rate decision and economic projections. Sorry. Again, this sorry, we are facing quite new. Okay, there is no audio? Okay. Please. Okay, let me check what's happening with the audio. Sorry about this. Smart audio. Audio is good for Michael. Okay. So I sorry, it looks like that the majority of the attendants have the audio okay. They have no issue with the audio. Those please that have issue, try to mute and open again the audio to see what's happening. If not, you need to log out and then log in again. Uncheck the first thing you can do is just check what is happening with your connection, okay? Hassan cannot hear. Okay. Everything looks okay from my end, yeah? Okay. Strabova, sorry, I don't know really how to pronounce your name. Strabova, say the only app open now is your app. Okay, I know what you mean with that. I think you're talking about the screen that we are sharing. Okay. I'm checking the audio, and the audio is okay. Yes, in the go to webinar, everything looks okay. Yeah, let's go to continue. Okay, we're talking about the interest rate decision for the US. No sound, say Hassan. Hassan, try to log out and then log in again. Yeah, I think will be the best. Okay. Then we have something important also to check how is the household economy, how everything is moving. If really we have circulation of money and we want to stop this cycle that is very important to pay all the debts, yeah, in the household environment. That are the retail sales. This is quite important to follow. We had the prior month a drop of 17.2%, and expected now is 8.6. Yeah, let's keep a close eye into it, because if this continue dropping and we are not comparable versus last year, even if we have a very optimistic mood, what will happen is people will lose their jobs. They won't be able to afford all the debts, payments. Yes, companies need to start just reducing the staff, people working there, and this can become really a very dangerous snowball. Okay, so that's why retail sales are a good thermometer of what is happening at the household area. Yeah, keep a close eye into it. Then we have CPI for UK and Europe, interest rate decision for UK, and we end with the GDP, quarterly GDP for the US that they expect stay the same. Yeah, we're talking about the Q4. It's a revision for Q4 in 2.1. So this is what is happening this month, and this is what we really need to focus in order to see how the market react or behave. Can make the phone call or hear the webinar through my headphones. Okay, Isabel is having some issues also with the sound. Okay, let me do this tryout. Okay, I will unplug my headphones and I will use the computer. Okay, I believe the audio maybe is less strong than before because I'm not using the headphones, but please let me know if those that are not hearing now, you can hear. Okay, she is saying that it's okay. So I will connect the speakers again. So let's move on. This is what is happening this month. This is what we need to pay attention. Why? Because we need to give foundation to all the optimism that we are seeing at this moment. Yeah. If we recapitulate of what happened before, if we remember mid-Feb, beginning of March, we have all this strong corona boom. Yeah, coronavirus started to spread around the world. We start with the lockdowns, everything becomes quite restrictive, the economies really stopped at all, and the mood was very pessimistic. Okay, we had a negative social mood, and this create really a strong drop of the global economies, especially Dow Jones, S&P, and the American economy. Yeah, American, Chinese, European, everything is so global now that when one economy is affected, it's affecting all the rest of economies. So we have this strong drop in the Dow Jones, and what is important here, the mood here with the drop was quite negative, was strongly negative. Then we have the bottom on March 23rd. Yeah, at the end. Oh yeah, sorry. At the end of March. Okay, so Etai is asking, make it bigger. Sorry. Now it's big. Okay, for all of you that want this presentation, please send me an email to info@thefinancialforecast.com, and I will send you the PDF with this presentation, all the graphic and all the information we will discuss today. Okay, no problem at all. Send me an email to info@thefinancialforecast.com. But something that is quite important we can extract from this graphic is mainly all these epidemics, pandemics, all this stuff are occurring at the end or at the end of bear markets, beginning of bullish markets. Okay, this is the moment what these epidemics trigger. And now we are in a totally opposite scenario. Why? Because the corona started in a top market. Okay, Dow Jones, S&P, all global economies were in record highs. Okay, from there the corona just start, it bursts, and then we have this drop. Yeah, but the mood was negative at that moment. After the bottom of March, by the end of March, everything start to ramp up. We'll see the markets just going up, and this is something that is quite interesting. The mood changed drastically. Yeah, we move from pessimism extreme to optimism again extreme, and we can see this easily. We can see all this in the news. We only need to follow the news to get a track of this. And if you see, we are talking about all the time that the Dow Jones is racing. So the main reason why all the economies are getting active again, we have this hope around the financial markets, are the hope of a vaccine, yes, and the end of the lockdown and the restart of all the activity, okay, the back to normal. And this is bringing optimism around media, around the indices. And this is a characteristic of what used to happen with B waves. So now we will jump to Elliott waves. I don't know if you are familiar with Elliott waves. I will explain what is the psychological background of a B wave. But for you that want to know more about Elliott waves, I will make a webinar next month only focusing on Elliott waves. Yeah, what are the key elements of Elliott wave psychology, structures, relationship between waves, all this stuff. Is a webinar around 1 hour 30, and we will cover the main topic of Elliott waves. And this look like that. Yeah, we have our first strong decline after a top. This could be an A wave, negative pessimism. Yes, but it could turn to the opposite quite fast, to something we can qualify as positive optimism. Everything looks like we are okay and we are moving out this big crisis. Especially always is reflected in the news. Okay, and we have here the headlines. Big waves used to be tricky because of that. It's what is called a bullish trap. Yeah, and we have a contradiction here between feelings and reality. Okay, that's why we need to check what is happening with the main KPIs, because that will give us a picture of the reality, what really is happening in the global economies. And on the other hand, most of the media is full of sentiment, of feelings, and that's what we can see now. We can see optimism in media, but really we can see this optimism and or this recovery in the main KPIs. That is the main question we need to try to answer to discard this big wave. And this starts just to pop up at this moment, at this top. Yeah, we have protests. Not only in the US, in different countries, we're having protests regarding racism, regarding the lockdown, regarding the COVID. So we have a social crisis that start to pop up. Okay, what we need to do is give some time to see if this goes to more or not, or is an isolated event. But we start having this protest. Okay, society is not happy with the situation at this moment. Yeah, that's the first topic. This is not so optimistic as we saw before. Then China is stopping some purchases, and this is bringing again the trade war and the agreement between the US and China. And the US is really tied with this, it's depending on this agreement. So if China doesn't fulfill this agreement, this will really create a big pain in the US and in the end in the global economies. Yeah, and China is stopping some purchases, some commitments in purchasing. And this is not good for the US. So we start seeing a negative side, yeah, not so optimistic side of the situation at this moment. Fear is coming back, social risk, and again the trade war. That's why focus on KPIs, to trying to be as objective as you can. Yeah, and trying to move aside all these feelings and sentiments. For this reason, the best indicator at this moment is the unemployment rate. Because as we saw in the prior webinars, the correlation with the Dow Jones, the interest rate, and the GDP is really high. And all the time the correlation is negative. So what we see is every time that the unemployment rate grows, the Dow Jones in this case drops all the time. And if we continue with increasing unemployment rate, so that means that the Dow Jones will continue dropping. Yeah, and this is more objective than hope news. Okay, that's why it's so important. Follow this indicator. If we want to try to put a measure on how big is the impact we have at this moment with the unemployment rate, we just need to go to the worst crisis in the US, probably the worst crisis worldwide. That was the crisis of 1929. And if we see here how the unemployment rate grew, we can see that it reached in 2 years the point of 15%. So it took 2 years to reach this level. And now it took 2 months to reach a similar level. So that is telling us how big is the situation at this moment. How big is the impact that the corona crisis is generating in all the economies. Okay, that's why we need to be careful in being optimistic so fast. Okay, and always try to be objective with this subject. What happened with the GDP and what happened with the interest rate? Exactly the same. Every time that the unemployment rate grows, the GDP drop. In any kind of the recession that we had in the last 20 years, we have the same behavior. And the same with the interest rate. Interest rate always drop when the employment rate grows. So what can we expect then? That's why Friday is so important. We will see a sustainable recovery from now on, because the lockdown is finished and maybe we have a vaccine there. Or if this continue, then we can see a drop in the GDP, a drop in the Dow Jones, and to keep the machine working, central banks probably will drop the interest rate, will increase the money, will print more money to reactivate the economy. That's why it's so important to see the interest rate decision and the press conference to have that thermometer of how the monetary policy will be in the coming months. Okay, is this clear? I hope yes. This is a very important. I think it's a very easy way to evaluate what is happening. Yeah. What could be the consequences of, for example, let's go up again, of an increasing unemployment rate? We said before, we need to go to a household economy, to your economy, and just start evaluating what happened if you lose your job. You don't have an income. You have a mortgage, you have your credit for your car, you need some obligations to fulfill, and you don't get the job quite fast. The social security cannot cover for you, cannot help you anymore. So this is what we need to be really careful. Okay, all this, you will stop consuming. That's why retail sales are so important. At the moment you stop consuming, this the way that the money circulates in the economy will stop. You cannot pay debts, you don't have income, other companies, other services, suppliers, the same. Okay, and this could be the reason of a debt bubble bursting. Yeah, why? Because all the growth we had in the last 10 years was based on debt. We increase the debt, we increase the growth, but now, if the economy stops and we are not able to cover that debt at all the levels, then this bubble will burst and we have the real impact in the economy. Everything triggered by the coronavirus. Okay? Good. Any question? I saying I. Yeah. That's why we need to be very careful. Don't be so sentimental at this moment. Try to keep the feelings aside and try to be as objective as you can with all this. Yeah, it's not an easy situation. Okay? So let's go to move to instruments. Okay? Michael is asking, do you think we will pay this debt? Michael, where are you from? Sorry. Because it's a quite interesting, London, quite interesting question. Really? I hope yes. And this is a hope. There's one point that the money circulating, or the value of the money, is becoming so virtual at this moment, and central banks have the ability to print money every time they need, and to inject money in the economy every time they need, that the debt probably will be paid with more debt. Yeah, if they are able to do this, and this tool, monetary policy tool, really continue giving the same results as before. If that doesn't happen, then we are in an issue. Yeah, and probably, yes, they will create something new to put all the debt at zero, but the problem is who will pay this debt? Probably, as always, the household economies will be ending paying this, will end paying this debt. Yeah, but I think, yes, of course, in one moment the debt will be paid, but probably we will enter in default first if the situation doesn't change. Okay, today I was reading in investing quite interesting news about the house market in the UK. And the headline was UK prices fall by most since 2019 as COVID hits. And this is another worrying topic. Yeah, so we are seeing again another market that is slowing quite fast. And it's another symptom that the economy, the household economy, is not okay. And instead of thinking of buying a house, you are being more cautious about what's happening, and you try to save money and keep the cash with you. Why? Because at this moment, when you have a recession, the best investment that you can have is a liquid money. Yeah, the more liquid the money, the best. Okay, I don't know, Michael, if I could answer your question, but if the situation doesn't change, probably we will enter in a default, and then will take some time to move out this default. Okay, are you okay with the instruments? We will analyze S&P, Euro, and gold. If you want another instrument, please let me know. And we always will give some priority to those instruments that you want to see. Okay? Good, so let's go to move to the graphics. The 10 years node, okay, the time. Okay, let's go to, I need to open, sorry, another tab then. And on one side, I will open the 10 years nodes. All the graphics that we will see are in the website, and they are for free. Okay, so if you want to access to all the graph and dashboard that we will see now, you need to go to free forecast, and in free forecast you can subscribe to the free package. Okay, everything that's free. Yes, you subscribe here and you will get access to the members area, and you have access to these graphics that we update in a weekly basis. Okay, good. So let's start with the S&P. Okay, what is happening now? We have this movement upward, but at this moment, if we analyze trend, we will see that the trend is sideways and many different degrees. Okay, degrees of trend. We'll separate or define these degrees in monthly, weekly, daily, and intraday. Okay, what happened with the monthly and what happened with the weekly? At this moment, they are sideways, and we will see why in just a few seconds. Okay, but what happened, and it's very nice, it's nice to understand this. All the movement within the financial markets behave in a fractal way, and this fractal has a relationship, is connecting all the movement that are happening. Yeah, they are not random. You have different, of course, different possibilities of movements. Yes, but they are not random. And what's happened? They are connected in three aspects: length, time, and speed. Very important. So that this means the basic structure we have contains three waves. Okay, 1, 2, and 3. And 3 waves. This is a basic iteration. And then, based on this iteration, in length, time, and speed, we can create a different kind of patterns. But this is a basic. So this means that this wave that we call motor wave, this will be the corrective wave, and this is another motor wave. Why motor? Because they move in the same direction of the trend, of the main trend. The corrective goes in the opposite direction. So the motor wave is connected with the corrective wave in length, yeah, because we have a retracement area. In time, because depending on how long does it take to the motor wave to be built, the corrective wave will behave in a specific way in time and also in speed. So what happened here? We have the time and the speed marked with the orange lines and the blue box. So ideally, if we have a corrective wave of the prior motor wave, that is this one, this is a corrective, okay? We don't know yet, but this is a potential corrective. Ideally, the end of this corrective wave should happen in this area. Okay, so this way we connect the motor wave with the corrective, these two, and we have an incomplete pattern. So then, if we have the corrective wave or a bottom in this area, this means that the chance to see a movement, an upward movement, increase. Okay, they are not 100% certain, but increase the chances of seeing a new high. Okay, that's why this is so important to understand, because it will help us to increase the chances to succeed or to make a decision to succeed in the next movement. So what happened with the first drop? The first drop was too fast, breaking that connection in time and speed with the prior wave. So then, if we really are correcting the sequence, this sequence, then this movement was too fast, and to continue seeing this corrective sequence, ideally, we have this bounce up. The price should stay below this key level, okay, of 3,143. If the price action break this level, then the chances to see a new high will increase drastically, okay? But if the price remains below this level, then we should be continuing seeing movements, downward movements inside this area and looking for the attractor within the ideal distribution area. Okay, is this clear? Very important, this connection between waves, and that's why we should be seeing a stop or a reduction in the volatility we saw before in the market. So the market needs to become more quiet, more calm, just absorb the fast movement that we had. Yes, all this emotional, this really big emotional impact we had with the corona. Take some time and then go back. How that is okay. So we have Itai saying nice analysis. Thank you, Itai. Hassan, sorry, you cannot hear. The rest is hearing. Please try to to check your connection over there. How the distribution area is computed is asking for Shine Praksa. Sorry if I pronounce well your name. Sorry if not. So this is based on the fractal behavior of these instruments. Okay, is like a math calculation that's happening not in MetaTrader. It's happening outside that. Yes, in one software that we have. It makes all the calculation, and the system, the algorithm, return this area. Okay, but that is the soul of our system. Yeah, it is taking into consideration many aspects at different degrees of what is happening. Yeah, it says connect to audio only. So I am only in audio. So that's from your side. Try to check what is the audio source that you are using at this moment. Yeah, and if you can connect the audio from GoToWebinar, probably is that. Okay. ETA is asking, okay, 3143 is like a key resistance. Yeah. Within this fractal behavior, you have, especially in this kind of construction, you have a non-trend zone. Okay, in this non-trend zone, you have this fight between upwards and downward movements. Yeah, so this create not strong movements in one direction. Okay, and the movement can be erased by the others. Yeah, that's what we call an anti-persistent area. Yeah, that's happening. That the moment that the price action moves outside that area, then the trend is more fluent. Yeah, and you go and move to the blue box. That is something that we call attractor. Yeah. Why? Because price action in any kind of instruments move from one attractor to other attractor all the time. It's moving from one blue box to the other. And what happened when the price reach the blue box, or stay in that blue box, or get rejected. Okay, so price action can stay trapped in this area to then move outside, or at the moment that is reached, it can be rejected in any direction. Okay, but what used to happen, mainly the price reach that area, gets trapped, and then move outside that area to start a new wave. Okay, a new sequence. That's what used to happen. In this case, we are talking about it's not a support zone, it's a resistance zone. Okay, because it's located above the price action. If it is located below the price action, then you can call it a support. Yeah. Beta is asking, the blue box is consolidation area. Yeah, it's like a consolidation area. Once the price reach a level, then the sequence is finished and we have the bounce, yeah, or the continuation. But probably the price, you have a high probability the price will stop there and will switch the sequence. Okay, so this is clear. Perfect. So we will move then to the dashboard. We need to check what is the trend at this moment for this time frame. Then we go to members area. In this case, we're talking about the S&P indices. This is long-term S&P. And here we will find the dashboard that this is finding the trend. What is the trend at this time frame at this moment? And the trend is sideways, the overall trend. Why? We analyze different aspects within the trend, the persistence, that is how the past events impact in the future movements, some statistics with the speed, length movement, range, mean, volatility, that is standard deviation, okay? Different aspect, the spectrum, that is capturing how all the movements that we have in a cycle, defined cycle, yes, and the speed, yeah, where are we moving? What we can see at this moment, the persistence is still strong to the upside, 67%. That's why the reaction, this movement of the potential big wave that we have at this moment is so deep, yeah, because the optimism is still impacting harder than the negative aspect, yeah. So that's why we have the chance to develop stronger movements to the upside, and that create a deep corrective wave. Then if we go to statistics, we see that we have more movements to the downside, okay, in the cycle. Then the strongest movement is to the downside. Yeah, the speed is negative. So in this statistic, the bears are ruling. Okay, they are stronger. They are really pushing down. Okay, so pulling down the index. If we go to the spectrum, we still have more movements, yeah, to the upside, and the speed at this moment is negative and can turn positive in the coming movements. Okay, so it's a fight between these two trends, and we have a sideways overall trend. Okay, and the recommendation when this is happening always is try to stay outside this kind of market. Okay, this is a monthly time frame. We're talking about a big degree of trend. What happened at weekly? We have exactly the same. We have a sideways trend. Yeah, 58% persistence upward, and then as the same as before in the multi-time frame, the stats are favorable for bears, negative speed, and the spectrum here is really pulling down. Okay, the trend is sideways, but we have a little more dominance of bears at the moment in the weekly time frame. Okay, if we go then to the graphic, what we see that the current movement that is happening now, this big wave, is inside the blue box and is within the orange lines. This increases the chances, if we have a top here, of this movement being a corrective wave. But for this, we need to stay below this level. Yeah, 3,108. We're talking about before 3,143, around that range. Okay, but this time frame is more precise, 3,108. We need to stay below this level. Don't break it. Create a top, and then see a change in the trend, yeah, in the direction. That's a key element that should be happening. And when this happens, then this top can be a potential big wave. Yeah, we need to continue analyzing what are the coming movements, but this increases the chance. Okay, so at this moment we're creating a top within this ideal area. That's why this gives more support to the idea of a big wave. We have in one instance all the psychological profile of the big wave that match perfectly. Then we have KPIs. We need more confirmation, especially of the unemployment rate. KPIs and that are not so positive as the social mood at this moment. And then we have the sequences that are telling us that we have a chance of creating a top at this moment with a potential within a potential corrective wave. Okay. Any question about the S&P? Then what is happening at intraday? Yeah, daily and intraday time frame. At daily, if we see sequence, we are reaching this blue box. Okay, so that means that we can create a top here. And the trend is again sideways. And here the persistence is aligned for bullish and bearish movements. Yeah, and we have some aspect where the bears are ruling. Something nice that I didn't mention before, but this that's why we call also the financial markets a fractal. Yeah, not always, because you will hear all the time, no, financial markets are fractals. It's not really the concept of fractal. Yeah, perfect fractal. You have certain aspects of statistical fractals, okay? And the spectrum is a very good example of it. Here we can see the symmetry around all the movement, how each movement tends to compensate the other. That's why we have this practically perfect symmetry. We have movement, of course, we can grow, we can drop, that happen, okay? But the movements, the sequence, the range of this sequence tends to compensate to each other. Okay, that's quite interesting, and always try to look the balance. This happens in all the financial instruments. Okay, so we have this sideways trend at this moment, and we are reaching this attractor. Okay, so we need to be careful with that, because we can be creating a top. And if we go to the intraday, we have exactly the same. We have a sideways trend, and if we see the graphic, we still can move upward to reach this area. Okay, and then if we see the different attractors, the attractors at different time frames are overlapping, and this area really increase the chance of seeing a top there. Okay, that is what is happening with the S&P. Okay, and we can extrapolate this easily to the Dow Jones, European indices, Asian indices. Yeah, they are highly correlated. Okay, any question around this? Okay, perfect. You're understanding quite okay. I'm happy with that. Let's go then to the 10 years note. Xian is asking, could you please do the same analysis for the Nifty? Yeah, I can do it. I don't have it here, but please send me an email to info@thefinancialforecast.com. Yes, I will show you the email. Please send me an email here. You are for everyone that have a question or they want me to analyze some instrument, and tell me the instrument that you would like to see. Okay, the instrument that you need. Okay, and I will send you the analysis during this week. Okay, info@thefinancialforecast.com. Okay. I need to log in TradingView. 1 second. Okay, I'm logged in. The same, if you want this PDF, please send me an email and I will send you the PDF straight away. That is faster. Okay, and you want to know the 10 years. Okay. So Eta, please let me know if this is a graphic you wanted to see, just to be sure that we're analyzing the instrument you are asking. Okay, it's this one. Okay, So let's go to weekly. I always like to start the analysis in the higher time frames, yeah, long term, to understand the nature of the sequences. Okay. But send me an email and I will send you more detail with the dashboard and everything. So here we can define, or we can just find out. Here we have breaks. Here we have a big break. Okay. So we will focus on this area, yeah, because the sequence looks to be more connected in time length and speed. Okay, but the trend is clear that it's a downtrend. The point here is just to find out if really we are within an attractor or not. So I will go to the weekly weekly time frame. Okay, and here you have a first sequence of 3 movements. 3 movements. I will use the pen. Okay, sequence of 3. This looks to be a really flat correction, despite we have a low. Here is a minimum, yeah, it's a marginal low. So this looks to be a flat correction. 1, 2, 3. So you have your motor, you have your corrective, and you have then the third leg of this movement. Yeah. So we we will connect then the lengths. I cannot give you the time relationship here, but at least we can get the length. Okay, we are in 0.618. Okay, okay, good. So price stop, because here you are in one of the first areas. Yeah, that is 0.618. So depending of some aspect within the corrective and the motor, you will have different areas for the attractor. So this will be the first one, and this will be the second one. Okay, depending on the trend and some other aspects, you have more chances to reach the second one or just to stay in the first one. Something that is interesting now is that you see that the price is moving around this area. Okay, so it's trapped within this attractor. Juan Carlos saying that he cannot hear. Check your audio. I'm not talking a lot now because I'm analyzing. Is first time I'm with this instrument. So we have 3 movements, and we have here another 3 movements, and we reach an area. So then this movement can be finished. We need to check what is the trend at different degrees. Yeah, so weekly, daily, and intra, and how the sequences are there. So in this case, we are here, but we can continue moving downward and reach a negative area. Okay, let's go to see what's happening at daily time frame. And here I will keep in mind a level around 1.5 for as a first key level, and a level around, put this area in 2.9 as a second key level. If you have break of these areas, then if you have a break of this first area, 1.5, around 1.5, this sequence is declared as finished, 100%. Yeah, this is finished here. And then you are in a corrective sequence. If you break the other area, then all this sequence is finished and they're correcting the bigger one. Okay, we will learn all this in the Elliott wave webinar that will take place next month. Okay, so at weekly time frame, you reach an attractor, but you have chance to continue moving downward. And let's go to check daily, the small waves. Okay, you have 1, 2, and then we have this third movement, a corrective sequence at this moment. That at this moment, because how it's behaving, this movement can be the corrective sequence of this one. Okay, so that still open the chances to see more movements to the downside, at least one leg more, because this is telling us that maybe it's not it's incomplete. Okay, so what you need to pay attention then, what could happen, and we will see 2 different degrees of waves, this wave and also the wave of lower degree, and we will look for the overlapped area, and the overlap area will be around this level, and this level. So you have a chance then, because you didn't reach this level, or this instrument didn't reach this level, to make another leg to reach 0.262, or continue moving downward to minus 0.123. Okay, this is what you can expect. I cannot tell you the trend because I need to just upload all the inputs in the system, in the tool, to tell you that, but I can give you that information later. Okay, and pay attention to level around 1. Let's say 1.7. Yes, in case you have a break of that level, then this low is the end for this 3-wave sequence. Okay, good. So we have the 10 years note, and as we are running already out of time, I will show you how the artificial intelligence is working at this moment, how it was the performance of March. So what is Bumblebee? Bumblebee is a tool that we developed that contains all this sort that we were talking before, the way that it analyzes, so it always keep analyze the fractal behavior of each instrument, and based on that, it detect the social mood and evaluate the different sequence or iterations that could happen in that instrument. And based on that, when the probabilities to succeed are high, then Bumblebee take action and enter in the market. Yeah, as simple as that, but everything using fractal behavior. Okay. So we have this working in an MT4 platform at this moment. All the coding, everything, the tool was built for MT4, and these are the results. Yeah, real results from December till May. In December, the tool went live, and since there we have a rentability of 37.6%, and the expected profit, annual profit, is 75.2%. Yeah, if we extrapolate the performance of these months. So Bumblebee is working quite okay. It's quite solid. The strategy, the analysis, and the way that the tool learns from itself, that at this moment is live in 3 pairs, in the pound, in the euro, and euro and dollar yen. So these are the 3 main pairs that were live during this time frame, and now we incorporate the Kiwi dollar, and we are testing the Aussie dollar. Okay, quite a strong rentability, very good performance. We are quite happy with the tool and how it's behaving. And this is what happened in May for the test pair, because during May, if you see the volatility was quite low, so Bumblebee act in this way, like in a protective way, doesn't introduce any investment, any operation, because we had a lack of trend during May, so that's why we don't have any operation on it. That's okay. Now the trend is back and June is moving again, so we have now a very good performance. So we take a break, but the test pair that we had during May were working very well, and we had at that moment the Kiwi and the Aussie, and both had really good performance as expected. So how are the pairs expecting to behave? So we have the pound and the dollar yen. We expect in the pound 31% rentability, annual rentability. The performance of the pound is really good. It's 100% based on all the history that we have. All the simulation, we take a really long time frame to test everything. 100% winning position, 42 wins, yeah, during the range of 1 year. The dollar yen is 42%, rentability 94% of profit position. That's really good for the dollar yen. Then we have the Kiwi, that is a new pair, 46%, really nice. And the euro, we have 76%. Okay, with the new version of Bumblebee, it was updated on April 30. Yeah, we changed the configuration in the euro. Yes, we switched it around because it was in a reversal strategy for how the euro behaves. That was not nice, but with this new update of Bumblebee, we get much better follow how it behaves and can trade much better. Yeah, the operations are really good and the performance is outstanding. So nice for the euro. And the last pair that we are testing at this moment is the Aussie dollar. That is a 36% return expected during 1 year. 91% of profit transactions. Yeah. So this is Bumblebee. It's working really nice. It's a very new tool. It's giving you the chance to have a different alternative in investing. You don't need to spend any time on it because everything is automated. Everything happens in an MT4 environment, so you can follow up what is happening in a daily basis. And you are the owner all the time of your account and your money. That's why this kind of investment is 100% liquid, because you have the money in your account and you can dispose of your money at the moment you wish. Yeah, really nice alternative. We are really happy. Our clients are also really happy. So we will continue adding more pairs to Bumblebee and improving the tool. Okay, so I have a question. It seems Bumblebee is working great for currencies. Yeah, exactly. So now we are setting currencies. Then when the last currency we want to work with is the USCAD. Then we have all the main pairs, and after that we will move to indices, commodities, and so on. Yeah, but now first we want to create a big portfolio of currencies. That is what is happening now. Yeah. So with this we end the webinar. Thank you all for your time. Any question you have, you want the PDF for this presentation, please send an email to info@thefinancialforecast.com, and I will try to give you an answer within this week. Okay, I will do my best. So Jian is asking, is it possible to make Bumblebee for the dollar INRI? I need to check it. Of course, it's possible because the tool will analyze the fractal behavior, and then we will have some answers, some outputs regarding that. It's something that can happen. Yeah, it's not at the moment in our scope to include in the portfolio. Yeah, we prefer to have more liquid pairs because that is very beneficial for the spread, and this is also beneficial for the strategy. Yeah, but perfectly fine we can add a bumblebee for your pair. Yep. Okay, thank you everyone. Thank you for your time. Have a wonderful week. And next month, we will have a webinar 100% about Elliott waves and how to make decisions, wise decisions using Elliott waves. Okay? I hope to see you next time. Have a nice week and see you next month. Bye.